Bitcoin is stuck between $88,000 and $91,000, and right now the crypto market is completely divided. Some people say this is a classic bull trap. Others believe this is the bottom before the next major move up. So which one is it? Today we are not guessing. We are going to look at real data, ETF flows, on-chain signals, liquidity levels, and key price zones. And by the end of this video, you'll have a clear game plan you can actually use. If you're invested in Bitcoin or waiting for the right moment, this video matters. This conversation is exploding right now on X and YouTube for one reason. Bitcoin is moving sideways after a strong move, and sideways markets create the most confusion. We are seeing ETF flows slowing down, funding rates cooling off, and price compressing between clear support and resistance. This is usually the phase where the market decides its next direction. Let's start with the most important structural driver of this cycle, spot Bitcoin ETFs. Recently, ETF flows turned mixed to slightly negative. That scared a lot of people. But here's the key question. Is this panic or just repositioning? So far, what we see is less aggressive inflows, but also no massive sustained dumping. Long-term holders are not exiting in size. If this were a true bull trap, we would expect heavy and persistent ETF outflows. That's not happening. This looks more like consolidation, not distribution. Now let's check on-chain data, because on-chain doesn't lie. Exchange balances are not spiking. That means Bitcoin is not rushing back to exchanges to be sold. Funding rates are neutral to slightly negative. That tells us leverage is low, and that's important. Major tops usually happen with extreme leverage and euphoria. Coinbase premium has been fluctuating but not collapsing. That suggests US spot demand is cautious, not gone. Key takeaway: this does not look like a market overheating. It looks like a market waiting. Let's talk levels, because this week is critical. On the downside, 88,000 is the first important support. 85 to 87 is the major structural zone. On the upside, 92 to 95,000 is the key resistance range. As long as Bitcoin stays inside this range, the market remains undecided. And there is one more very important detail from the last few hours. Overnight, Bitcoin dipped all the way down to $86,000, a sharp move down, what traders like to call a liquidity sweep. And what happened right after that? Price bounced back quickly into the 88,000 range during the day. This is important. That move to 86,000 did not break the structure. There was no panic follow through, no acceleration in selling, and no collapse in on-chain metrics. In fact, this kind of move usually does one thing. It cleans weak hands, triggers stops, and tests real demand. And that's exactly where the next scenarios come in. Scenario 1, bottom confirmed. If ETF flows stabilize and Bitcoin reclaims 92,000, this range becomes accumulation. That opens the door for a move towards 98 to 102,000. Plan for long investors, DCA. Traders, wait for confirmation above resistance. Scenario 2, bull trap confirmed. If we lose 88,000 with volume and ETF outflows accelerate, this becomes a fail breakout. Plan will be protect capital, wait for lower support zones, and no need to rush. And scenario 3, range continues. The market stays boring, and that's okay. Plan, DCA for investors, range trading for experienced traders, and patience wins here. My verdict? This looks more like a potential bottom than a bull trap, but confirmation matters. The data shows caution, not panic. And major moves usually start when most people are unsure. Set your alerts, watch the flows, let the market confirm, and don't chase. Now, tell me in the comments, do you think this is a bull trap or the bottom? I read every comment. Subscribe to Jiba Crypto for the next update, and as always, stay smart, stay ahead.